Hello, ladies and gentlemen. Good morning to everyone in the house. I'm so pleased to be with you here this morning. So let's quickly confirm that we are good to go. So if you can see my screen and you can hear my voice clearly, type in hi in the comment section so that we can get this live session started. Oh, thank you very much. Let's see what's happening in the comment section, please. All right, I can see John Crescentis. Thank you very much. Hey, another profit day. Yeah, good morning to you. Thank you for that confirmation. Catfish, thank you. Good morning. Cast, good morning to you as well. All right. All right, so I will be taking this as a positive confirmation that we are good to go this morning. I'm so excited to welcome you to yet another promising session on the Extra and Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host as we shall be taking a technical dissection of the current market structure. And for those who are joining us for the first time, you are highly welcome on board, and I promise you that you will get a handful of knowledge from this session. So what we simply do here on a daily basis is to gather here as a community in anticipation of the New York session. So we review all the pairs we have been monitoring since the beginning of the week, and using the information we have gathered on the charts to position ourselves in such a way that we can catch any potential opportunity during the New York session. It might look a little bit complicated at first, but one thing I want to assure you is that with time you get to understand how this works. Just stay tuned in, be with us throughout the session, and join us on a daily basis 10 a.m. UTC. And with time you get to understand how it works, and you will be able to use the information you have gathered here to make your independent and individual decision on whatever financial instrument you want to be taking on this one. So once again, you are welcome on board, and on this note, let's dive into the market structure to see what is really happening in the market. Hey, Innocent Babe, I see you. Glad to have you around after such a long time. How are you doing today, Innocent Babe? Trust you are doing well. I see you, Carrie. Good morning. Thank you. 3245, good morning to you too as well. So with that being said, let's see what is really going on. In fact, in the last 24 hours, it has been hell of a loose here on the market, as we saw how the US oil tumbled over 6% to the downside, in fact breaking the previous low at the $70 level, as we were able to scoop over 1,000 pips in profit as we had multiple entries running on the US oil. And this was as a result of what is happening in the US economy, the bank issues, the SVP bank, and this has also extended to Europe, as we can see here. The Credit Suisse 2 issues also just sprung up yesterday. So we're having quite a lot of turmoil in the financial sector, and this has been sending some shockwave through the market. So we shall be looking at how we want to be positioning ourselves. We want to look at how the market has been reacting to this event, and we want to be positioning ourselves in anticipation of wherever price action will be going. And for today, we don't really have any high impact event for the pairs that we are monitoring so far for this week. So we are going to be skipping the economic calendar and look forward to the chart and use our technical skills to identify trading opportunities lining up for us today. And one more thing I would like to state here is that we have a Michigan publication, that is the Consumer Sentiment Index, coming up tomorrow, and we are likely going to be seeing the reflection of this anticipation on the chart as price action. So keep this in mind as we dive into the chart. So the first commodity we are going to be looking at this morning, as usual, is the US oil. And on the US oil, what do we have here? Look at what has been happening since the beginning of the week on the US oil. You can see how price action has been on a bearish momentum. So how did the week started for us here on the US oil? Look at what happened on Monday morning as we were able to identify a beautiful channel just within the $77.20 area and the $76.50 level. And you all know what we look out for whenever we have this kind of flat channel. We want to be positioning ourselves at either end in anticipation of either a breakout to the upside for buying opportunity or a breakdown to the downside for selling opportunity. And with our sell stop order right below the $76.50 level on Monday, we had our first sell position for the week. And that went on to hit our TP target at the $72.50 level, which gave us about 400 pips in profit at the beginning of the week. Then we also added another position below the $75 level, which also rode all the way into the TP target at a $75 level with over 250 pips in profit. So as at the first day of the week, we were already in profit on the US oil as we scooped over 600 pips in profit. And congratulations to everyone who has been part of this trade. And since then, we have seen a situation here where price action has continued to find lower lows and lower highs. And during the live session yesterday, this is what we identified here using the bearish trend line that we identified here after connecting the series of lower highs as a yardstick for trading activity. And what was our agreement here during the live session yesterday? Well, we were at a situation here during the live session where we saw our price action respected the bearish trend line one more time to incite another wave of bearish momentum to the downside. So we joined below the $72.50 level, and during the live session yesterday we were around this point as we saw price action was trading just right around the $71.50 level. And one thing I stated here during the live session yesterday is that, okay, where are we during the live session yesterday? I think we were here. All right, we were here during the live session yesterday. We started seeing some buy pressure resume at around the $70 level, and I told you how important the $70 level has been. And we scaled up into the daily time frame to realize that the $70 area has been the lowest point price action has ever been in the last 1 year. And with that situation there, we said if a price action does a further breakdown of the $70 area, we're definitely going to be looking forward to adding more position to our existing trade. And this was exactly happened as a sell stop order sitting below the $70 area was triggered to the downside, and this also moved significantly well. So for those who had missed out on the opportunities that we had prior to yesterday's trading session, you must have taken advantage of the breakdown of the structure, and if you truly did, you would have made over 300 to 400 pips in profit before this bullish momentum began during the later part of the New York session. So for those who have been part of this trading journey since the beginning of the week, well done to you guys for being on standby. And in fact, we have been profitable so far for this week. So some of you might decide, okay, fine, I'm done for the week. Let me go and wait for the next week. Well, there are some people like that, and there are some people who definitely want to be maximizing their profit, looking for more position. And as we head into the New York session today, what is really going to be our plans? What are we going to be looking out for based on this current market structure? Well, before I go into the details of what our expectation is going to be like for today, I would like us to quickly scale up a little bit to the daily time frame. Let's see things from an holistic point of view and see what is really going on in this market in order to decide what our next line of action will be. Now, if we scale up into the daily time frame here, hold on a second, let's run through the daily time frame quickly. All right, so on the daily time frame, we actually have observed that price action has been bearish for quite a while now. And to further emphasize the strength of the sellers in this market, we saw how the bearish trend line here has been respected in the last 7 to 8 months. And in this situation here, we also acknowledge the fact that price has been caught within a channel during the later part of last year. I think the last quarter of last year till the present moment, we saw the supply zone of the channel sitting around the $83 and the $80 level. Then we also had the demand zone of the channel sitting around the $70, $72 area. And what did we see during the live session yesterday? We saw how price action has broken down that $70 level, which appears to be the first time since December 2021. The last time price ever got into the $70 level was in December 2021. Let me zoom out so that we can see things here. So this was the last time price ever got into the $70 level, and it's from that point we saw that bullish momentum that began during last year's trading session. So we are at a critical point right now as price action has broken down a key significant structure, which is the $70 level. And if we are going to be looking at this current structure from a technical standpoint, this is a significant bearish signal here. So with the breakdown of a significant structure like this from a technical standpoint, from a theoretical perspective, we should be expecting a retest of structure to further emphasize the strength of the sellers at this particular point in time to send price crashing further to the downside. So this is a theoretical understanding here, but it's not all the time things always happen like this, as the bearish trend line we have, the bearish breakdown here, could likely turn out to be a false one to incite another wave of bullish momentum. And if we take a technical look at this candle here, which closed yesterday, you will see that it's looking more like a hammer candle, which from a technical standpoint has a high tendency of the presence of buyers in this particular market. And why did I say so? If you look at how the candle closed after testing the $66 area yesterday, you can see we had a sharp rejection, giving us clue into the possibilities of a buyers still existing around this current area. And in order to identify what to look out for today, we need to take that into consideration too as well. So if we are looking at things from the daily time frame here, we really don't have any much information, as we need to scale down to a much more lower time frame to be able to understand how this rejection has evolved into, and if probably has evolved into a reversal pattern, we might likely be taking advantage of a counter trend opportunity. Well, I will be calling it a counter trend opportunity or a short-term bullish momentum because of the breakdown of the $70 area, where there is a likelihood that price might come back into that structure to incite another wave of bearish momentum. But if it does break above the $70 area, then we might likely see that breakdown as a false one, and continued buy pressure above this level will have a high chance of sending price skyrocketing to the upside. So these are the things we are going to be looking at on a much more lower time frame. So join me as we scale down to the 1 hour time frame to understand what is really going on in the last 18 to 20 hours now. Okay, so when we scale down to the 1 hour time frame, this is what I was able to identify. Now, first of all, we must acknowledge the bearish trend line. And remember what I said prior to the session about the trend line. We said the trend line will continue to be our yardstick for trading activity. Simply means if price action continue to trade below the trend line, we shall feel comfortable in our sell position. And if the breach of the trend line happens, that is, price breaks out of the trend line to the upside, then definitely that will be a signal of a potential momentum shift. Now, with the test of the $66 level here during the later part of the New York session, what did we notice? We noticed some bullish momentum begin in this market. Price action, we saw an engulfing candle, and as soon as price got into the structure here at the $68.85 level, we begin to see some selling pressure resume around this area. Though personally on my own platform, we actually had this bullish momentum triggered at the $67.50 level, and if you are taking advantage of that one, well done to you for being on standby to catch that one. And if you have a buy position running currently, I will be advising you to move your stop loss accordingly, probably to your entry point area or just right above your entry point to secure this position as we continue to monitor price action. So what I will be doing right now at this point is to understand the new consolidation phase we have identified here. Remember, we saw the resistance point here. Sellers continue to reject any bullish attempt to break out of that structure. And also we have a support line around the $67.76 level. So we have a beautiful channel right now that we are going to be using to guide our trading activity for today. So we have a structure already forming here, and this structure may likely transition into a trend continuation pattern, and at the same time it could transition into a reversal pattern. So it's an important confluence we have here, as price could go either way at this point. So let's first of all take on the possibilities of a bullish momentum in the market. So for those who are already in the buy position, move your stop loss accordingly, secure your position as we wait out and see if price action will be doing a breakout of the $68.85 level. And if this happens with a buy stop order right above the structure, we want to be having a buy position triggered at this point. And remember, a buy position here is more or less a counter trend opportunity, which might likely be a retracement of that previous impulse leg that we identify here. Now, please listen attentively to this if you are a buyer in this market. As price action continues to the upside here and price action goes up, we want to be securing our positions accordingly by moving our stop loss. And the reason why that I mentioned earlier is simply because this is a counter trend opportunity and price action has been bearish in this market since the beginning of the week. So we need to be very, very conscious, as the possibilities of a sudden pullback to the downside is still very, very possible at this point. Now, as the bullish momentum continues, if it so continues like that, as soon as price gets into the trend line, what we want to be doing here is to move our stop loss accordingly to secure this current position, as we are at a critical point here where price action will be striking the bearish trend line here, and that level also shares a beautiful confluence with that $70 area. So what we want to be doing here is to remain patient and wait out and see how price action will be reacting to the $70 level to decide if we are going to be adding more position to our buy position, or we might be getting ready to sell the US oil at that point. So what are the things we want to be seeing around that area? So if it happens that we start seeing sudden pressure resume below the $70 level, right below the bearish trend line here, as on our lower time frame, we see signs that buyers are finding it difficult to break out of that structure, and at every point in time we start seeing rejection of that level, then that will be a beautiful signal that we might be in for another wave of bearish momentum to the downside. So these are the views we are going to be looking out for to sell if price action ever breaks out of the $68.85 level. However, if price action continues in such a way that it breaks out of the trend line and the $70 area, then at this point it's a beautiful signal that we want to be joining and adding more position to our existing trade. And if we are lucky enough on the lower time frame, we start seeing buy pressure resume just right above both the trend line and the $70 area, we shall be comfortable to buy more position on the US oil. So these are the scenarios we are going to be looking at to buy the US oil based on this current structure. However, if price action continues to the downside, I always like to make sure that we keep all options open here just in case price action does the opposite. The market is a fluid field, and as traders we want to be as fluid as possible so that we can be part of the movement whenever it evolves. So in this kind of scenario, despite the fact that we are looking forward to a counter trend opportunity here, we cannot ignore the possibility that sellers could actually come in this market. And the reason why that is, you all know we have been on a long-term bearish momentum. At least throughout the week we have been selling the US oil, and there is a likelihood that this trend might continue to the downside. So one thing I want us to be doing here to sell the US oil, if it so happens, is to see price action break down to $67.76 level, which is the support line of this channel that we just identified here. So if price action breaks down, and luckily if we start seeing selling pressure below the $67.76 level on our lower time frame, this will be welcoming an additional position to the sell position in that regard. And a further breakdown of that support line at the $66 area will definitely welcome additional position to our existing trade. So kindly be on standby for these opportunities here as we look forward to see how price action will be reacting to this channel we just identified here. So these are my views on the US oil, and I hope I made myself clear. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. If you have any questions, feel free to drop your inquiries in the comment section, and I'm here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before I move on to the next pair. Alright, so in the absence of no questions, I want to assume that we're on the same page here. So we shall be moving on to the next option. And the next option we shall be looking at this morning is the US Tech. Now on the US Tech here, it has been a choppy experience on this chart since the beginning of the week. So let's quickly run through how the week started here. So at the beginning of the week, we had a huge channel where price action fell into a consolidation phase just within the $12,100 level, which has been serving as a resistance line for this week. Then we have the support line for the week sitting just right above that key level at 11,800. Now, to further make you understand the importance of this current structure and how to position trading opportunity here, I want us to look at the 4 hours time frame where I'll share with you a significant structure which has been influential to price movement on this chart. Now, if we look at what happened throughout the month of February on this chart, you will see how price action has been bearish. And to further emphasize the bearish momentum here, we were able to connect the series of lower highs which gave us this bearish trend line. In fact, we have a couple of trend line here. We have the major one, the major trend line, which is a thick line on your screen, and we have the temporary one, which is a thin line on your screen. So with this trend line here, it is quite obvious that price action was bearish throughout the month of February. But there's something significant about the structure which makes us doubt selling the US Tech at this point, and that is the 11,800. Now, if you look at it throughout the month of February, you see that the 11,800 level has been a strong buying niche in this market, as despite the fact that we are seeing lower highs in this market, at no point did we see a lower low, which negates the potential of a bearish momentum in this market. At every point in time price sellers try to break down the 11,800, we have been seeing sharp rejection from the buyers, negating all attempt by the sellers to break down that structure. The same thing also happened here during the first day of this month. The same thing also happened here at the beginning of this week too as well. We saw sharp rejection of the 11,800 a couple of times to further emphasize the strength of the buyers at this particular juncture in this market. So for me at this point, anything above the 11,800 looks more bullish to me, as we don't want to be selling anywhere above that structure. We want to see price action do a breakdown of the 11,800 for us to be looking out for selling opportunity. So if that does not happen, well, I'm of the opinion that we should hold on to a bullish momentum in this market. Now, when we scale back down into the 1 hour time frame to see how price action has been reacting to this current structure in the last 4 days, this is what we were able to identify. Now, look at the structure we have here. See how price action has consistently found higher highs and higher lows in this market. And when we connect the series of higher lows here, you can see that we have a beautiful bullish trend line, which I told you yesterday that this trend line will continue to guide our trading activity for this week. So if price action continues to remain above the bullish trend line, we shall feel comfortable in our buy position. But if the bullish trend line is breached to the downside, then we might likely be anticipating a sell-off in this market. But at this point in time, price still remains above the bullish trend line. And in fact, we had a buy position triggered yesterday, as I told you, that we should be having a buy stop order sitting above the $12,000 level, and another one sitting above the 12,100. This was identified on Tuesday, and since then price action had continued to climb higher highs. So during the live session yesterday, we identified the structure here where we saw as soon as price got into the 12,240, we saw selling pressure resume around that area, and a breakdown of the 12,170 level triggered a sell position, which appeared to be a retracement of that impulsive move. And during the live session yesterday, we laid emphasis on the structure here where we said if buying pressure resumes around this area, we want to be joining a bullish momentum above the $12,100 level. However, if price action breaks down, reaches the $12,000 area, the bullish trend line here must have been broken. Then we want to be looking out for selling opportunities. But the latter is what happened here. The former is what happened here. We saw price action break above the 12,100, respecting the bullish trend line, do a retest of the 12,100 to further give us a confirmation to join the rally to the upside. And if you have been part of this trade, well done to you, as you would have been at least in the profit of about 200 pips right now. And if you are taking advantage of the second position at the breakout retest of the 12,170, you would also be running with about 110 pips in profit. So well done to you if you have been part of this position right here, as you would have made if you are taking advantage of this two position, you will have been over 300 pips in profit right now. So the next thing we want to be doing at this point is to secure this current position. As usual, whenever we have our positions running in our favor, definitely we want to be moving our stop loss accordingly to secure the position against any sudden pullback that might likely happen in this market. Now, from this current structure here, where do you think we can lock in some profits in this market? Well, for me at this point, I will be suggesting anywhere below the 12,240, which sits right above the bearish trend line, with the hopes that price action might still find an opportunity to climb and find higher highs. But if this does not happen and price continues to the downside, we are still going to be holding on to a bullish momentum. As you can see here, this is the bearish trend line we identified on the 4 hours time frame. We saw the breakout of that structure here yesterday during the later part of the New York session yesterday. We saw the breakout of structure, and from a technical standpoint, whenever we cite a breakout of structure, you all know what we look out for. There is a high chance that price action might retrace back into structure, which is the bearish trend line that was broken to the upside, which also shares a beautiful confluence with that bullish trend line that has been supporting this bullish momentum since the beginning of this week. And if that happens, buy pressure is very likely to come in from that area to incite another wave of bullish momentum. So even if we have the sell momentum continues to the downside, we don't need to be scared or worried about it, as this might likely be a retracement phase of that impulse leg that started yesterday. So let's see how this is going to play out. If it drops further to the downside, we have a key structure at the $12,170 level where we want to see how price action will be reacting to that structure to determine if we are going to be buying or selling the US tech. Now, for buying opportunity on this US tech, if price action drops that far to the downside, coming into the 12,170 area, I told you earlier, a beautiful confluence we have here, both the bearish trend line that was broken yesterday and the bullish trend line that is supporting this bullish momentum since the beginning of the week, shares a beautiful confluence with that 12,170. So whatever happens here will determine if we are going to be buying. So to buy the US tech here, we want to see buy pressure resume, probably price action transitions into a reversal pattern around this area or above the structure to incite another wave of bullish momentum. So let's be on standby to catch that one if that is going to be the case here. However, if price action drops below the 12,170, see how it will have dropped below the bullish trend line here, that will be a signal that a momentum shift is about to happen. Now, if the breakdown of both of the structures happen, one thing I would like to state here is that we don't want to get too excited to jump into a decline from that level, as it could turn out to be a false breakdown and we don't want to get our fingers burnt. So we want to see some further confirmation to happen here, which is likely going to come in the form of a retest of structure. So a retest of structure on our lower time frame followed by selling pressure will definitely welcome a sell position in this market, as this will have been a signal that the bullish trend line is no longer strong enough to continue to hold that bullish momentum. And in fact, if a breakdown of the bullish trend line happens, price action will be trading below the bearish trend line we identified on the 4 hours time frame, which has been supporting that bearish momentum to the downside, which will now further confirm and emphasize the strength of the sellers in this market. So we are not going to be selling the US tech unless price action breaks down the $12,170 level in the future. Now, what happens if price action does not go that far, but instead from this point continue to find higher highs? Well, in order to position ourselves for more opportunity, for more buy opportunity in this market, we need to acknowledge the current structure here, which is around the 12,330 level. As you can see that the bullish momentum that started yesterday, as soon as it got into the 12,330, we have been witnessing multiple rejection of that area, hereby giving us a clue that sellers are coming in gradually in this market. And this could be as a result of profit-taking activities, as well as those who are taking advantage of this bullish momentum right above the $12,000 level will at one point want to be taking some profit, which is likely going to be inciting a retracement phase on the chart in anticipation of another wave of bullish momentum. So with the current structure we have here, we want to be acknowledging this resistance line here, which falls at exactly the 12,330 zone. So we shall be identifying that structure, and for the sake of clarity, we want to be labeling it so that we can see things from a visual perspective and understand what is really going on here. So we already have a resistance point here which has been rejected multiple times, negating continued buy pressure in this market. So one thing I'll be saying here is that if we have a breakout of that resistance level during the New York session today, then price action will be going to the upside. So you can have a buy stop order just right above the 12,330 with the hopes that price action will be doing a breakout, retest of structure to incite another wave of bullish momentum to the upside. So this is what we shall be looking forward to if price action does not plunge to the downside on this chart, and instead if it continues to find higher highs, we are looking forward to a breakout of that structure for a trend continuation on this market. So this is my view here on the US tech for today. If you do have any questions, feel free to drop your inquiries in the comment section, and I promise you I will be checking the comment section from time to time. So with that being said here, I will be moving on to the next pair, and the next pair we shall be looking at today is the GBPUSD. And on the GBPUSD, we have been selling in the last 24 hours here, but let's quickly run through what the week has been for, how the week has gone by for us on this chart. So at the beginning of the week, we spotted a buy opportunity at the beginning of the week, as we saw price action initially caught within this channel here, where the resistance point was sitting at the 1.21050 level, and we had the support line sitting at the 1.20350. So this was where price action started. In fact, it started on a strong bullish note here. As you can see, this engulfing bullish candle at the beginning of the week, we saw price action retrace back into structure. We saw the significant breakout of that resistance line, and it was at this point we knew that a bullish momentum is gradually setting up in this market. And during the live session on Monday, I told you that we want to be looking out for buying opportunity at the culmination of this retracement phase. As we can see, the retracement phase culminated at around that line, which has been supporting that bullish momentum here since the beginning of the week. So we said we are going to be looking out for buying opportunity above that structure, and to further buttress our expectation on Tuesday. Is it Tuesday or Monday? Okay, on Monday's New York session, we identified the 1.20750, where a breakout retest of that level will be welcoming a buy position. And that was exactly what happened, I think, a couple of hours into the New York session. And we also added another buy stop order above the resistance line here at a 1.21050 level. And in fact, we had two positions running on Monday, as the first position ran about 120 pips before we started seeing selling pressure, and the second position here ran with about 100 pips before we started seeing selling pressure. So at the beginning of the week also on the GBPUSD, we were on a positive note here, but one interesting thing now came up which lasted about 24-48 hours on this chart, and that is the selling pressure we observed at the 1.2200 level. So since Monday's New York session Monday, we have been seeing that all attempt by the buyers to break out of this level has been met with strong resistance from the sellers, and this had led into a huge consolidation phase here, where we were thinking that participants were actually looking forward to a catalyst that will be driving price action. And to further buttress this structure and further guide our trading activity for yesterday, I told us all that we want to be using this bullish trend line as our yardstick for trading activity. And so what I simply mean by that is, if price action continues to trade above that bullish trend line, we will feel comfortable in our buy position, but a breakdown of the trend line will definitely be welcoming a momentum shift in this market. And to further buttress this current structure, we also connected a series of lower highs here, which lasted about 24 hours during our live session here, and I said a breakdown retest of the structure will definitely be welcoming a sell position in this market. Now, with the sell stop order below the structure, I think this was triggered prior to the live session yesterday. We saw price action drop to the downside, and in fact price action moved about 130 pips in our favor before we started seeing this bullish momentum come in this market. So I hope you moved your stop loss accordingly to secure your position, and if you did, you would have been taken out of that position with some small profits. Now, followed by this bullish momentum we saw here during the later part of the New York session yesterday, I'm of the opinion that this was more or less a retracement phase of that previous impulse leg. So what I did here this morning is to take into consideration that previous impulse leg, which I'm of the opinion that the bullish momentum we are seeing so far is more or less a retracement of that impulse leg, which is likely going to be inciting another wave of bearish momentum to the downside. So with the information like this, what I did next was to bring out my Fibonacci retracement tool like we always do and run it through the previous impulse leg. And one thing we definitely want to be doing at this juncture is to locate the golden zone area, which always falls within the 50 and the 78.6% of that previous impulse leg. And with that situation here, as price action got into that 1.2050 level, I had my sell limit order around this area, and boom, you can see price action triggered. For everyone who are part of this trade, well done, well done, well done to you for being on standby to catch this move. So right now, what to be doing right now is to secure your current position. So if you are taking advantage of any of this opportunity here, you will currently be running with roughly 50-45 pips thereabouts on this one. So kindly secure your current position by moving your stop loss to somewhere just right above the 1.20750 level. Now, with the situation we have here, for those who are not yet in this trade and are looking forward to sell the GBPUSD, well, there's no hope lost at this point, as the market is still likely going to be giving us some more opportunities to join that decline if that is going to be the case in this market. Now, what do we want to be looking forward to continue to sell the GBPUSD for today? Well, before I go into the details of how to sell the GBPUSD for today or to add more position, let's quickly run through the daily time frame to have an holistic view of what is really going on. So we don't want to get caught up in the setup here on the 1 hour time frame, losing touch with what is happening from an holistic point of view. So with that being said, we shall be scaling back up into the daily time frame here. So on the daily time frame, Let's quickly run through the daily time frame. Let's see what is really going on there, and then we shall be coming back down to make a decision on this chart. So the daily time frame here, I will just zoom into the current structure, which I will be looking at the last 3 to 4 months in this market. Now look at this. It has been bullish since the beginning of this year. Obviously, as you can see, we have a beautiful demand zone just right above the 1.18500 zone here, and this was exactly where price action started this year, respecting that bullish trend line one more time, then bringing price back into that strong supply zone, which has been consistent for selling pressure in this market. And what we saw here was the selling pressure continued in such a way that it led into the breakdown of that bullish trend line that you can see on your screen. And if you look at the structure closely, you will see that the bullish trend line was broken for the first time in the last 3 to 4 months. And it was a beautiful signal that we might be going bearish, as this significant breakdown here is more or less can be seen as a bearish signal. And obviously, as you can see, price action dropped significantly through a consolidation phase back into that demand zone. So price action came back into where price action started this year, just around the 1.185, 1.180 level. Now, with the situation we had here, we saw another buy pressure resume, just like it has always been in the last 3 months in this market. This level has been more or less of a buying niche for participants in this market. Now, with the situation of things, now we saw this bullish momentum begin, and in fact, it led into the breakout of this bearish trend line, which started during the later part of the month of January. And you all know what we look out for whenever we have a breakout of structure like this. We expect that one point in time price might likely come back to do a retest of that structure, which might be the resistance line or the very important key level we have here at the 1.200 area to incite another wave of bullish momentum. And if you look at what has been happening here since the beginning of the week, it appears price action is actually going through a retracement phase, which is as a result of profit-taking activities. So with the situation of things right now, price appears to be approaching that structure here, which shares a confluence with that bearish trend line. So one thing we want to be doing, like I told you on the daily time, on the 1 hour time frame, ensure that you have moved your stop loss accordingly to secure your current position, your current sell position, as we wait out and see how price action will be reacting to that important level here at the 1.20500 level to decide if we are going to be selling or buying the GBPUSD for today. So since price action remains above both the bearish trend line and that key level at the 1.200 level, is still looking leaning towards a bullish momentum in this market as long as price remain above both the structure. So we might likely see a situation, like I said earlier, price retrace back into our key zone. It will break down the structure a little bit, leading into a reversal pattern to incite another wave. So what we are going to be doing for the sell position here, all we just need to do right now is to identify the possible area where this retracement phase could culminate. And the only way we can do that is by using our Fibonacci retracement tool, run it through the previous impulse leg here, and aim at an area between the 50 and the 78.6% of the previous impulse leg as an area to look for our TP target. So we have TP target for sellers. TP target for sellers, let's label this TP target for sellers. And that same area will also be serving as a potential buy zone in this market. So I will place this right in the box. So let's have this and let's make this a yellow color. All right, and let me go back to the text here. I want to reduce the font, it's too big, and give this a dark green color. Beautiful. So we have this current situation here. So for sellers now, we want to be having our TP target sitting between the 1.200 level and the 1.18900 area here. So we have a huge TP target zone for this for sellers at this particular point in time. So for those who are selling so far, you can have your TP target within this area. Now, for those who are looking out for buying opportunity here, we want to be seeing price action drop into the structure. It could be the 50% retracement, which is along the 1.20 level, or it could drop to as far as this area. But anywhere around here, what we want to be looking out for is a reversal pattern. It could be a double bottom structure to incite another wave of bullish momentum, and this might likely take about a couple of days before it matures, but we shall be here to continue to monitor price action. So let's scale back down to the 1 hour time frame and let's focus on that area. It's around the 1.20500 level, a very strong psychological area, to see if this bearish momentum will be continuing back into this area, or we're going to be seeing that bullish momentum continue to the upside here. So with the information we have gathered here, let's scale back down to the 1 hour time frame. So I will be acknowledging the 1.20500 level, which is let's see where it is right now. Okay, I think we identified this at the beginning of the week. Beautiful. That is it right here. So we have the 1.20500 level, which is just right above the support line for this week. So this is where price action started this week, had a 1.0350, and then during the live session, during the New York session yesterday, we saw the breakdown of the 1.20350, which is a beautiful sign that sellers are saying that we have a statement around that area too as well. So with the breakdown of the structure, for me, it's a beautiful signal for selling opportunities here. So let's hope that price action will be continuing to the downside from this area. So now for those who had missed out on the sell opportunity around the 1.21050 level, well, at this point, I will be advised us to remain patient here, as we cannot jump in front of a moving train. We need price action to give us some retracement from this impulsive move in order to be able to join that decline. And in order to join the situation here, I have a couple of structures we can be using to guide our trading activity for today. And one of them is this trend line that you have here. So we have a trend line here, as you can see, and we already had the breakdown of that structure here during a couple of hours ago. So we might likely see a situation where price will retrace back into the 1.20750. It could in fact retrace back into the bullish trend line, and then if the appearance of selling pressure resumes on our lower time frame around the structure, we want to be getting ready to join that decline to the downside. And for those who are already in this trade, it will be an opportunity for us to add more position to our existing trade. Now that we have this situation figured out here, another thing we could look out for if price action does not retrace back into the 1.20750 is to look out for our price react to the 1.2050 level. If we have a situation where price transition into a trend continuation pattern on our lower time frame, it could be a bearish rectangle pattern, something like this, around this area, a breakdown, retest of structure, then we could join that decline to the downside. Then a further breakdown of the so a further breakdown of the 1.20350 level will definitely welcome additional position to our existing trade. So this current sell setup has a potential of giving us multiple entries in this market. So I would advise us to be on standby so that we can catch these trading opportunities in this market. So let's be on standby to catch this one. Now, if you are thinking of buying the GBPUSD at this point, I will be suggesting that you hold on to this one, as you can see what has been happening in this market following the multiple rejection of the 1.2200 level at the beginning of this week. I'm of the opinion that sellers are still very, very strong in this market. And like I said earlier, the bearish trend line here will continue to guide our trading activity, at least for the later part of this week, as price action continues to trade below that level will make us comfortable in our sell position. However, if you are thinking of buying the GBPUSD, I will suggest that you hold on here and let's see if we are going to be having a breach of this bearish trend line. So if we have a breakout of both the 1.21050 level and that bearish trend line, then at that point we can be thinking of buying the GBPUSD there. But if that does not happen, well, for me, I will be holding on to this bearish perspective in this market. If you have any questions, feel free to drop your inquiries in the comment section, and ensure you screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So let's see what we have in the comment section here before we move on to the next pair. So I can see 799, well done, good morning. 511, good morning to you. Stinel, good morning to you. Susie MB, good morning, glad to have you around. Hey, Oluwafemi, I hope it's Oluwafemi I know. I hope it's Oluwafemi I know. Okay, good morning Femi, how are you doing today? Oil, oh, we treated oil. That was the first commodity we treated this morning, but if you can stay tuned in, we are going to be doing a recap on that one during the end of the session. Okay, I implore you to stay tuned in. 828, good morning to you. All right, so in the absence of no questions, let's move on to the next pair. So the next pair we shall be looking at is the XAUUSD, which is the gold. And on the gold, we have been buying at the beginning. We bought at the beginning of the week on the gold here. Remember, we had this channel identified. We saw the week started on a bullish note anyways. We had the strong bullish momentum at the beginning of the week here, right around the 1,869 level, and we saw the first resistance point at the 1,895, making this level our first resistance point for this week. And after identifying this during our live session on Monday, I told us all that we want to be looking forward to either a breakdown or breakout of this channel for trading opportunities. And what we saw during the New York session on Monday was quite interesting, as we saw the bullish momentum that led to the breakout retest of the 1,895 to give us an opportunity to buy. And since then we have been buying, and we bought it here, and price action moved over 2,000 pips in our favor before we started seeing the sell pressure resume in this market. And during our live session on Tuesday, we considered the appearance of the sell pressure that we saw here, and it was a sign that price might likely want to be going through a retracement phase. And to further buttress this, we identified this bearish trend line after connecting the series of lower highs here, which lasted about 24 hours. And what we said we are going to be doing is to sell the breakdown of the 1,904, and we had our sell stop order below the structure. And interestingly enough, price action broke down the structure on Tuesday, but we were in a loss side for over 24 hours before price action came back into that profit zone. And in fact, it moved about 1,600-700 pips before this bullish momentum began. And during the live session yesterday, I told us all that we are going to be using this bearish trend line as our yardstick for trading activity for this week. That is, if price action continues to trade below that structure, we will be comfortable in our sell position, and a breakout retest of that structure will definitely be welcoming additional a buy position in this market. And during the live session yesterday, we saw the breakout of the structure. I told us all to hold on, that the breakout could turn out to be a false one, as we need a retest of structure to happen. So the price came back to do a retest of structure around this area. If you had joined that move, well done for you for being on standby to catch that one. But if you had missed that one, well, I'm sure your buy stop order above the 1,915 level would have been triggered. So on this one, we had price moved about 2,000 pips in our direction before the sell momentum here began during the later part of the New York session yesterday. So we have a new resistance line at the 1,935. Now, with the situation we have here, whenever we have a breakout of structure, we expect that price will come back, do a retest of structure to incite another wave of bullish momentum. And what we have seen so far here in the last 12 hours or so, we can see that price actually has come back to do a retest of the 1,915, but we are yet to see price action find a new high. So in that regard, and in order to have a better perspective into this, we want to be scaling down to a much more lower time frame so that we can have a simple setup that we can use to guide our trading activity for today. And before I go down, those who are already in the buy position here, kindly move your stop loss to your entry point here at the 1915 area to secure this current position. Now, scaling down into a much more lower time frame, I have a simple setup which I identified here at the beginning of today rather, and this was identified on the 15 minutes time frame, I guess. Or is it a 15 minutes or 30 minutes time frame? Let me look at okay, it's a 30 minutes time frame. All right, so on the 30 minutes time frame, this is what I saw here, and this is the 1915 level that I acknowledge here on the 1 hour time frame. So after citing this rejection of the 1935, we can see that price action has been bearish in the last 12 hours or so. So what I said what I thought of today is that if price action continues to trade above the 1915, we shall feel comfortable in our buy position. And for those who are already in the buy position here, I told you to move your stop loss to somewhere just right around the 1915 to secure your current position. Then I had a buy stop order above the 1920, and it appears the position has been triggered as price action is currently running with about 300 pips in profit, 30 pips in profit at this point. So let's see how far this momentum is going to go. So for today, for the trading activity for today, we want to continue to see price action remain both above the bearish trend line and the 1915 to feel comfortable in our buy position. And to further buttress this bullish momentum, if we look at what has been happening here since the beginning of today, you can see that price has been finding higher lows. And if we bring out our line chart to connect the series of higher lows here, we should be having a bullish trend line that will be guiding our trading activity for today. So we have a bullish trend line, that is the line in purple here. So I will be doing some readjustment to make price to suit the current market structure. So this is what we have here. So we might likely see a situation where price will drop again into structure by pressure to continue to the upside. So let's continue to look out for more buying opportunities in this market. And for those who had missed out on this opportunity here above the 1920 and above the 1915, well, we could be looking for more opportunities at the breakout of the 1925. Is it 1924? Okay, 1924, I guess. Yes, 1924 has been a structure that has been respected in the past too as well. So let's label this area for the sake of clarity. So 1924 level, place this at the top right hand side of my screen, and let me give this a purple color, I guess. Okay, let's give the purple color. I'm giving this a purple color too as well. All right, so we have the 1924 level here figured out. So what we are going to be doing now is to anticipate a breakout retest of that structure to give us that leverage to add more position to our existing trade here. So that is what we are going to be doing here. We are looking forward to more opportunities to add more buy position above the $1924 area. However, if anything like a breakdown of this bullish trend line, which I said will be guiding our trading activity for today, happens, well, at this point, I want you to be seeing this as a momentum shift. So if price action breaks down the trend line, retest of structure, we want to be selling to the downside. So let's keep this in mind as we still look forward to our bullish perspective in this market. So this is what we are going to be looking at on the XAUUSD for today. So I hope we'll be on standby to catch this opportunity. And for those who had bought above the 1915, kindly move your stop loss to your entry point to secure this current position, as we hope that price action will continue to climb higher highs. And if a breakout of the 1935 happens, we want to be adding more position to our existing trade. So that is that on the XAUUSD. If you have questions, feel free to drop your inquiries in the comment section. So we shall be moving on to the last pair for today, which is the USDJPY. And on the USDJPY, things have been quite choppy since the beginning of the week here, though we had some trading opportunity in this market. Remember, we had a huge channel where price action initially traded for about 8 hours to 10 hours before the breakdown of the support line at the 135.600 level happened, which actually gave us a position to run, and price action moved over 120 pips in our favor before we started seeing this bullish momentum started. And we were part of this bullish momentum actually, and during the live session yesterday I told us all that we shall be using the bullish trend line here as a parameter to guide our trading activity for yesterday. So we'll continue to hold on to our buy position if price action remains above that bullish trend line. And if we have the bullish trend line breach to the downside, we said we are going to be looking out for selling opportunities. And this was exactly what happened during the early hours of yesterday. I think during our live session yesterday, an hour after the live session, we saw the breakdown retest of the trend line. And I hope you are able to take advantage of that move as price action moved about 200 pips in our direction before we were caught within this channel. So right now, for those who are still in the sell position here, kindly move your stop loss to the resistance point of this channel here at the 135.600, which happens to be the support line of the structure we identified at the beginning of the week. So you can move your stop loss to somewhere right around the 135.600 area to secure this current position. So right now, what do we have on this chart? So in the last 24 hours on this chart, it is quite obvious that everyone in this market are waiting for a catalyst. And I'm of the opinion that the Michigan Consumer Sentiment Index is one of the catalysts on the table that majority are looking forward to decide where price action will be going. And as a result of this anticipation, we have seen a situation where price has been trapped within the 135.600 and the 132.500 area to further emphasize the indecision in this market. And you all know what we look out for whenever we have this kind of structure. We want to be seeing price action do either a breakout of the channel, that is breakout to the upside for buying opportunity, or breakdown of the 132.500 level for selling opportunities. So if you are not in this trade yet, I would advise you to remain patient at this point and wait out for either of these breakouts to happen for trading opportunity to be mature enough to join any rally or decline at this point. However, if you are already in this trade already, you're already in the sell position here, I have told you to move your stop loss to somewhere around the 135.600 level as we wait out and see how price action will be reacting to this current market structure. So it's quite a simple setup we have here on the USDJPY. So let's be on standby for any trading opportunity that evolves herein. So that is it for today. That's the last pair for today. That's the USDJPY. If you have questions, feel free to drop your inquiries in the comment section. So we shall, for the sake of those who are not part of the beginning of the live session, well, let's quickly run through what we talked about today, after which we are going to be calling it a day. So the first commodity we looked at today is the US oil, and in fact the US oil has happened to be the most profitable trade for us this week, as we had a massive of over 1,500 pips on this one since the beginning of the week. Remember, we have been selling the US oil, and the bearish trend line here after connecting the series of lower highs has continued to be our yardstick for trading activity for this week, as price action has consistently respected the structure. And look at what we have here. We finally saw the breakdown of that $70 level. That was the lowest point price has ever been in the last 1 year. And with the breakdown of the structure also was a signal that we might be going more bearish in this market. So I told you here that price action is currently caught within a channel and indecision phase right now, just between the $68.85 level and the $67.76 area. So what I told you is that we are already in the buy position here. For those who are already in the buy position, I told you to move your stop loss to your entry point to secure your position, as remember, we're on a long-term bearish momentum here, and with the current market structure, the high chance of a bearish momentum is still very, very strong in this market. And as a result of this, we have, whenever we have this kind of channel, what we want to be doing is to remain patient, have a buy stop order above the $68.85 level to join a counter trend continuation, or have your sell stop order below the $67.76 area to trigger a sell position in this market. And if price action continues to the downside, we want to be adding more position at the breakdown of the $66 area to add more position to our existing trade. So that is what we are looking forward to sell the US oil for today. Then another thing I stated here is that we might likely have a counter trend opportunity, that is a retracement of that impulsive move that started this week, and we might likely see price action break out of the $68.85 level. And if this happens, triggers our buy position. I told you here that we need to be very, very careful to secure our positions accordingly as price action moves in our favor. And there is a key structure I identified here at the $70 area, where I said as soon as price gets into the structure, you can see how that area is. It shares a beautiful confluence with a bearish trend line. So I said here that if price action gets into the structure, we want to remain patient and see how price action will be reacting to that level, and this will be decided, giving us a clue if we are going to be buying or selling the US oil for today. So to buy, we want to see price, to add more position to our buy trade, we want to see price action break out of structure, retest to join to the upside. And if we start seeing certain pressure below the structure in our lower time frame, it will definitely welcome a certain opportunity in this market. So let's keep all this in mind as we continue to monitor price action. Then we went on to talk about the US tech for today, and on the US tech, we are already in a buy position that is running in profit right now, and I told us all to move our stop loss accordingly to secure the current position. And I also laid emphasis on the bullish trend line here, which I said we will continue to use this trend line as a yardstick for trading activity, at least for the later part of this week. As long as price remain above the structure, we shall feel comfortable in our buy position. And I told us that we should not be worried if price action plunged to the downside, that is if it breaks down to 12,240. I told you that we have a beautiful confluence here at the 12,170, where it shares that confluence with both the bearish trend line and the bullish trend line here. So there is a likelihood that price action could resume buy pressure around this area to incite another wave of bullish momentum. So let's take that in mind. Let's put that in mind too as well. But if price action breaks down the 12,170, then it would have broken down that bullish trend line as well, giving us a clue that the trend line may no longer have the capacity to hold that bullish momentum. And if this happens, we want to be seeing it as a bearish signal. A retest of structure in our lower time frame will further give us a confirmation to join that decline or add more position to our sell trade here. And I also cleared this here that if price action does not drop that far to the downside, but instead it continues to climb to the upside, then we want to see our buy stop order above the 12,300, where a breakout price action taking out all the sell positions here will give us a leverage to join a trend continuation to the upside. So this is what we shall be looking at for the US tech for today. Then we went on to talk about the GBPUSD, where I told us all we are already in the sell position here. And for those who had missed out on this opportunity, I have told you to hold on and look out for probably a retest of structure before joining that bearish move to the downside. And if price action evolves into a trend continuation pattern around the 1.2050 level, breakdown retest will be welcoming additional position in that regard. So let's be patient on this one. And for those who are already in the sell position here, kindly move your stop loss, secure your current position right above the 1.20750 level as we continue to monitor price action. Then we went on to talk about the XAUUSD, where I told us all we are in a buy position here, and we hope that price action will continue to the upside. And I shared a simple setup here on the 30 minutes time frame, where I said we want to be using the bullish trend line, which is marked with the purple color, as a yardstick for trading activity. And it appears that price action is continuing to the upside, so we are looking forward to price breaking out of the 1,924 level to add more position to our buy momentum. And I also made mention the fact that the possibilities of price action coming back to retest the 1,920 or the bullish trend line here has a high chance of still giving us a bullish momentum. So what we don't want to see for this buy position is price breaking down this bullish trend line. So if a breakdown of the bullish trend line happens, we want to be wary of this and get out of our buy position, as we might likely be having an opportunity to sell the XAUUSD. Then we went on to close the day with the USDJPY, and on the USDJPY we have a simple flat channel here on the 1 hour time frame, and I've told you that for those who are already in the sell position on the USDJPY, kindly move your stop loss right above the 135.600 level. That is for those who are still in the sell position in this market. And if you are not in this trade at all, I've told you that let us hold on and remain patient for price action to mature for a trading opportunity. And you all know what we look out for whenever we have this kind of flat channel. We want to see either a breakdown of the 132.500 level for selling opportunity, or the breakout of the 135.600 area for buying opportunity. So let's be on standby to catch either of these opportunities when it finally happens. So it's on this note I'm going to be calling it a day. It has been a wonderful moment with you guys here this morning, as I wish you best of luck during the New York session. And for those who are joining us for the first time, you are welcome, and I hope you are able to catch one or two things that you could use during your trading activity for today. And I still look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the pairs and instruments we have been monitoring since the beginning of the week has been doing so far, and at the same time get ourselves prepared for the final day of the week, which is Friday tomorrow. So on this note, I wish you a wonderful day once again, and I can see your comment. Another profit day. Well done to you guys. I really appreciate. all right, so do have a wonderful evening, everyone. Bye bye.